Warehouse building owners, a newer roof, not having a claim before, and great tenants can trick you into thinking your risk is low. But real estate is one of the highest risk businesses for large insurance claims. Whether it be natural disasters, a fire, water damage from a frozen pipe, we see it all the time. In this video, I'm going to show you the exact coverages building owners need like you before you start shopping for quotes and some example pricing to go along with it. Hi, I'm Austin Landis, and I run a commercial insurance agency with warehouse clients across the US. Insurance works very well for large businesses because they have a lot of expertise and great insurance people at their disposal to help them avoid traps. I create these videos to give smaller and mid-sized businesses the tools and the resources to never get taken advantage of by insurance companies. There are so many traps and pitfalls that warehouse building owners fall into on their insurance policy. They get hit with co-insurance penalties after construction costs jump up. They have to pay for code upgrades out of pocket because ordinance and law coverage was taken off their policy. Water damage isn't covered because the carrier added an exclusion for it, and it could be a million different things. On the liability side, the fine print can really gut the policy, such as assault and battery exclusions leave you having to pay for a situation after a parking lot incident, or an animal exclusion turns a parking lot dog bite into your problem. Before you even look at the premium, make sure to have a list of requirements that meet your objectives. There are far too many to review in this video, but I've included a checklist that you can download detailing what coverage options you have and what you should require out of any quotes so that you can make a more educated decision on your insurance purchase. Here's my method for warehouse buildings. I secure the property coverage first. This is the policy that has the highest cost, is the most risky, and the coverage where a lot of the exclusions will be added so claims don't have to be paid. This pays for property damage that occurs to the building that you own. For example, if a wildfire were to damage or burn down your building, this would be the policy that would replace it. I seek out a policy with agreed value or a waiver of co-insurance tied to the current replacement cost valuation of the building. Additionally, if this is your warehouse, make sure that you have adequate contents limits to cover your stock and materials also on agreed value basis. Additionally, I want ordinance and law to cover the undamaged portion of the building, the demolition, and the increased cost to rebuild back to code if an inspector says you need to upgrade your building. I also want business income or loss of rents coverage written so that you can maintain cash flow while the property is being repaired. I also want to make sure that we have an adequate amount of water damage limit to the policy. This is frequently excluded on warehouses, and if I have to have it limited, I want it at least $100,000, and the larger the building, the larger the sublimit that is acceptable. I also want to make sure that theft is included as a covered peril and not excluded. Additionally, I want to make sure that replacement cost is on the roof if your roof is 10 years or newer. I want to make sure that the deductibles are not too large for the client, especially the wind deductible if you have a large roof. And lastly, I want to make sure that equipment breakdown coverage is on the policy. Once the property side is right, I then add general liability, ideally with the same insurance carrier as the property coverage. This policy covers your premises liability. For example, if someone tripped over a curb and claimed that it's due to dangerous conditions and then they sue you for it. Once you have a good policy put together, I have a couple suggestions. First, instead of lowering the building value, increase the deductible. With penalties, lowering the value benefits the carrier more than it actually benefits you. Your coverage will go down faster than the premium does. Increasing the deductible creates more predictable claims outcome, and at the end of the day, you'll probably still pay out less anyway. Additionally, always require your tenants to have their own liability insurance and add you as an additional insured on their policy. If they don't have liability insurance, your policy will end up paying for all of their issues. Additionally, make sure to be keeping records of all of your construction projects, especially roofing on warehouse buildings. Many policies will depreciate the roof if it is over 10 to 12 years old. Being able to prove that the roof is newer will come in handy if any claims adjuster claims that it's an older roof, and this applies to things like HVAC if they claim wear and tear. Just having the records will only benefit you in these instances. Additionally, a protective safeguard endorsement is one that certifies that there's protections on the building, such as sprinkler systems is the big one on warehouses. If you accept the discount from having a sprinkler system and at the time of loss you don't have it, or it didn't work because it wasn't maintained, the claim can then be denied. Make sure that if you have a protective safeguard endorsement on the policy, that you 100% comply and that the sprinkler system is maintained. And lastly, get a catastrophe model for your property. This is likely a large property with a large roof. You need to be able to understand what your biggest risks are, and any agent from this space should be able to provide you a list of risks and grade them A to F or 1 to 10, just kind of depending on the model, and it looks something like this. You should set your deductibles and your coverages on what claims are most likely to happen, because this is what the underwriter is looking at when they underwrite your property. Real estate is one of the few industries where we regularly see catastrophic full limit losses. We have multiple open claims right now for this exact thing. A couple claims for tornadoes, some wind damage claims. We had a fire completely burn down a $14 million building recently. It is completely random, but this means you need a serious policy from a serious insurance company, and the effort to find it is 100% worth it. I'm including a concise checklist below. Hand it to your preferred agent or insurance company, and it'll help you have more meaningful and strategic conversations about your insurance. The price gap between strong coverage and bad coverage is usually very small until the day that you have a claim. A quick word on pricing expectations and how to present yourself to the market. Carriers are going to look at construction and protection, like wooden frame versus masonry construction and sprinklered versus non-sprinklered. Also, they're looking at the age and condition of your roof and various systems such as your heat and air system, your tenant mix, hours of operation, prior losses, vacancy levels, and experience in your area. You can't change your geography, but you can document upgrades, show a leak response plan, keep service records for alarms and sprinklers, and validate your building limit with current data. This is how you earn better terms without sacrificing the coverages that we just locked in. Here are some real examples of pricing. The first being in the state of California with the warehouse building that is valued at $3,151,000. They had a loss of rents limit of $205,000 and the deductible was $2,500. The annual cost for this policy for both GL and property is $3,714, which equates to a monthly cost of around $309. The second building in the state of Nevada is valued at $1.37 million. They had a loss of rents coverage of $180,000. It has deductibles of $10,000 with a 3% wind hail. The annual cost for this policy is $5,823, which includes general liability coverage, which comes out to be a monthly cost of around $485 per month. And lastly, in the state of Arizona, we have a building valued at $5 million. They opted out of having a business income or loss of rents coverage. The deductible on this property is $50,000 with a 2% wind hail deductible. The annual cost for this building is $34,397, which includes general liability, and a monthly cost of $2,866. When pricing out building insurance, know that your tenants are a very big deal. Some common warehouse tenants that will kick you out of the preferred insurance market is tire warehousing due to the fires, chemical mixing or storage of highly flammable material, pallet manufacturing, wood cutting without a sprinkler system, and other tenants that have either liability issues or cause an increased fire potential at the property. If you're a building owner and you want your insurance handled the right way, grab a checklist below, start a quote on our website, or use the link to schedule a time to talk with me.